Box's fiscal third quarter results are out, and overall things seem to be progressing. Management did give us an update on the IBM partnership, which is moving along as planned. They have 100 deals in the pipeline with IBM, and some of the impact of those deals is expected to come through in the fourth quarter results, so that's a good sign. And the majority of the impact will be in the fiscal 2017 year. Management gave us updated guidance for the fourth quarter, which was slightly ahead of the Street's expectations. So you can see the Street was expecting revenue of $80.8 million for the fiscal fourth quarter of 2016. And management guided to be between 81 and 82 million, so slightly ahead of that estimate. And the consensus estimate for fourth quarter loss per share is 31 cents, and management's guidance of an operating margin on a non-GAAP basis between 43% loss and 44% loss, with a diluted share count of 123 million shares, would result in an implied EPS of about a loss of 29 cents. So slightly ahead of the consensus estimate. So overall, this is favorable. There were a couple of things that were a bit disappointing. One, management didn't give us a comparable retention rate for the third quarter of last year, so we didn't get the 7 consecutive quarters of retention rate that we wanted to input into our model. So we'll have to wait until we have a couple of more quarters of retention details. And then the other thing is we didn't get a view on the 2017 fiscal year. We were hoping we'd get some visibility, especially with that IBM deal. But in fact, management just gave us the fourth quarter of 2016 and then the full year of 2016, which is then kind of redundant because if you already know the fourth quarter and you know the actual results for the first 3 quarters, you already know what the full year of 2016 is. But that's, not a huge deal there. We have input the results into our earnings model, and if you'd like to download the model, it's available for free on our website, gutenbergresearch.com. Just click on the Free Models tab, and you can scroll down to Box, click the button to download. So what we've done here is on the right-hand side of the screen is our updated earnings model with today's results, and on the left-hand side of the screen is yesterday's model prior to today's release that was calibrated to meet consensus estimates. So now we no longer meet consensus estimates, obviously, because they'll change tonight when the analysts go through and update their models. But we have kept the revenue growth rates constant for the future periods. So this is assuming that the analysts are not going to make any changes to their model. And then we've calibrated the fourth quarter to what management's guidance was from tonight's call. So one thing to note here, we're not using a price earnings multiple here. We're using a price to sales. So this is based on the average next 12-month consensus sales estimates per share. And we take cash out and we value that separately because as they eat away at their cash balance, we want that to be reflected in the valuation per share. So you can see the net cash per share prior to this quarter was $1.68, and now we've come down just a bit to $1.44, which is actually not too bad considering what's going on with the CapEx in their new facility, and also just the additional costs for marketing. So we've put in the details for this quarter. We put in the new guidance, and the share price has gone to $14.50 a share from $13.75 yesterday. So we're actually showing an increase of about 5.5% from yesterday's valuation, and shares are right now down about 1% in after hours. So directionally, we don't think it necessarily makes sense where shares are headed right now. Consider the company's operating loss keeps narrowing and their revenue growth rate is accelerating slowly, but it's still accelerating. So we wouldn't be surprised if we see a couple of analysts actually increase their revenue estimates and maybe bring their operating loss estimates down just a bit, just tweaking it a bit. So directionally, we would expect shares to be up a bit, which is a little bit counter to what's going on in after hours. So please check back in a few days after the analysts have updated their models. We'll recalibrate this to meet the consensus estimates, and thanks for watching.